Stocks bounced overnight, lower oil prices, and NVIDIA's conference, the GTD conference, I believe it's called, where Jensen, being the absolute showman that he is, basically announced, $1 trillion revenue is going to be possible, which, whilst that sounds super impressive, is actually only a slight upgrade from the previous forecast from earnings. But the man knows how to make a headline and has done so very well. Just added fuel to that tech rebound. Look, we've still got private credit issues on the horizon. We've still got Iran going on. Trump mentioned that he was going to be he stood there with his lackey JD Vance and just did his usual distraction thing and said he's going to be proud to be the US president that takes Cuba. He said takes back Cuba, but I'm not entirely sure what he meant. I mean, who knows? But yeah, so we had the S&P rise, around the 1% mark, as did the Nasdaq. Just a general bounce back and across the board there. So look, we're a bit of a relief rally overall after 3 weeks of negative markets, which we haven't really seen in a while. We've got central banks galore this week. There's 5 central banks. We've also got some PPI data during the week, I believe. The calendar's a little bit all over the shop at the moment. Just with the government shutdown. Excuse me. Look, we're still in strong sell territory, but we did see this bounce back quite a bit yesterday in the SPY. I mean, it still finished down 0.4, but it really made quite an effort to bounce back yesterday. China's still doing pretty well on a 5-day basis. We're still down for the Dow, the S&P, the Nasdaq, and the Russell. Still fairly negative in terms of daily and hourly, etc. But that gets it out of that territory where we're testing the 200-day moving average for the S&P 500, which is something to be a little bit wary of. We do have quadruple witching this Friday, which is all of the options expiry, etc., which will, JT options, Mr. Options in our office, he certainly thinks they'll probably try to hang the market, or the market will try and hang in there, still to steady into that just before the, just so options expiry goes to plan. But they can be volatile at times, movements in or movements out. But you probably won't see any true direction until necessarily next week. I'm still essentially on watch. Finn, who's doing the morning call on Thursday this week, he keeps asking me, what are we doing? What are we doing? And the short answer is, I don't know at the moment. We really are. We've got, everything's up in the air. Inflation's up in the air. The Strait of Hormuz is up in the air. The Allies haven't remotely backed Trump. There's a lot of rates have gone, or bond yields have gone through the roof. I sort of tend to be of the opinion that we're pricing in a lot of inflation, but we're not pricing in the downside growth, the downside to growth that will cause. I don't think this is demand-driven inflation, which is a very different thing to, obviously shock inflation like what we're getting at the moment. And we've also got Moody's basically rating at a 49% chance that the US will go into a recession in the next 12 months. So I'm a little bit more concerned in terms of seeing through this as we've got tariff inflation, we've got, which is a one-off, and effectively a one-off, and then it's going to have to be cycled on 150-day cycles now because of it was ruled to be illegal, but so who knows what's going to happen there. Trump's had to push back the China meeting, but nothing would have got done there anyway. I think it would have just been to blow kisses and look like he's actually doing something regardless. Overall, I think this inflation, I think will slow the economy. We saw Meta offload some more jobs overnight. they're looking at another 20% of their workforce or the like, and we've had Atlassian, we've had WiseTech, we've had by Block. I think that the real risk here at the moment is that with all higher long-term rates is going to do is slow the economy down, and any sort of short-term inflationary effects from tariff and oil will basically be the floor could fall out of it just as demand just craters. With future soft labour markets, etc. So everything still runs around the labour market. We're up to about our sixth. So Blue Owl halted quarterly withdrawals on private credit. Morgan Stanley cap withdrawals at 11%, and they've got 7.6 bill. BlackRock's cap withdrawals for the first time ever. Cliffwater's cap withdrawals. Blackstone, JP Morgan. They're de-risking and basically saying more capital required. But cracks are very much starting to show here in the private credit. They just really do keep stacking up. You add economic weakness to that, there could be a bit of a waterfall running there. The dam walls could break. Definitely, I think probably more of a long-term risk than this Iran conflict, truth be told, because if there's a run on these things, and the banks have been restricted from lending to all this, it'll really reduce the ability to for businesses to get any form of lending. So again, could push interest rates down. As I mentioned before, we've got Polymarkets here. Has jumped overnight 11.5% on will the US invade Cuba. Trump basically said that he's going to be proud to be the president that took back Cuba. When asked why no president had ever done it before, JD Vance replied, because they've never had a president smart enough, which is possibly the greatest textbook example of brown nosing I've ever seen in history. So it was just one of those dog and pony show press conferences again. I was going to run the Trump truthiness meter, but it was just it was just a bit of a joke, to be honest. It was too bad to even run through that. So if you scan the QR code here, it's going to take you to our. We've done a fair bit of deep research here on how the closure of the Strait of Hormuz and the duration of it would affect your portfolio. So this is just the top page here, and you can actually toggle this and widen out the weeks. Below it is what sectors, has a little heat map of what sectors will work, what sectors won't work. And then it's got a bunch of our high conviction thematics at the bottom there, and whether they'd be positively or negatively affected. We are seeing there's a couple of key things that are coming out of the Strait of Hormuz that actually also affect chip making for Taiwan as well. So it's obviously not just going to be cars and transport. It's going to affect sort of everything really. And as it stands at the moment, the chips are already under a massive supply crunch, as is memory. So but basically as you toggle this and change it, it goes up to 12 weeks. It'll just below here. It explains the economic effect and down here, but then goes on to explain what sort of effect it'll have on certain sectors firstly, and then the oil price below, right at the bottom, and also where most of the high convictions sort of thematics that we're in here at MPC at the moment. So scan that QR code and you can go to it, or you can find it in Mosaic. If you haven't already got a subscription, you should get one. The content, like that interactive research report on Hormuz, is they're free, and we will keep them free for at least the next few months. So you'll get your first month free if you, particularly, that only applies to the recommendation services. We've got US recommendations, we've got high conviction recommendations, we've got an ETF portfolio for those of you who want to follow an ETF portfolio. model portfolio, structured investments, and crypto as well. So, we're obviously, you can essentially, you'd get all of that thrown in with a platinum membership for $149 a month, which is about probably a quarter of the cost of most other recommendation services out there. And you'll get all this content as well, not just an emailed newsletter like the olden days. You'll actually get some good interactive content, not just your typical old, quarterly newsletter update or weekly newsletter update. And there's podcasts in there and everything. So drag yourself into the modern era and get a Mosaic subscription. That pretty much wraps it up for today. I would expect the ASX market just to be broadly, higher. We've got RBA expecting 25 basis point hike today. That's at 2:30, I don't see a major reaction. I would imagine the RBA will probably back off a touch from being too hawkish, because I think what is going to do a lot of the job for them, particularly, is basically higher fuel prices. We're hearing reports of country New South Wales being, diesel particularly being towards $3 or above $3. So that's gonna feed into our food and things really quickly, and it's gonna very much eat up the any sort of disposable income that people have got, considering how much it's risen. So it'd be interesting to see how the RBA handles that in their press conference. And we'll see at 2:30. For those of you who watch Ausbiz, I'll be on the call today. A few decent stocks in there. Tune in at 12 o'clock. Otherwise, I'll speak to you again tomorrow.